Upon the initial reaction of earnings coming out, Nvidia did rally about 7%. Now you are only up about 2.5%. So I think the earnings call will be very important for Nvidia. Specifically, how long can this growth keep up? Because you're starting to get to the law of large numbers, as Nvidia is a $2.4 trillion company. And upon initial reactions, the S&P 500 is actually selling off on Nvidia's beat and raise. Nvidia reports a 262% jump in sales and signals continuing AI boom. Nvidia's EPS came in at $6.12 versus $5.59 as was the estimate. Revenue came in at $26.04 billion versus $24.65 billion as was expected. So beat by about $1.5 billion on Q1 revenue. But the important part is guidance. Nvidia said it expected sales of $28 billion in the current quarter. Wall Street was expecting earnings per share of $5.95 on sales of $26.61 billion. So about a $1.5 billion top line revenue guide up for next quarter as well. A just continuation of beat, raise, beat, and raise. But it's going to be important what they say on the earnings call about the longevity of this, right? Because you're getting to $28 billion a quarter. How long can that keep up? Inevitably, you're going to get some quarters that start to come in worse than the last quarter. You're eventually going to get negative growth, and that becomes problematic. Now, believe it or not, Nvidia actually fell to $918 per share when the report first came out. And that was because I think these numbers were broadly already priced in, like I said, but Nvidia announced they are going to do a 10-for-1 stock split on June 7th. And do you know how the markets are? They love a good old stock split. Nvidia also said its data center category rose 427% from the year ago quarter to $19.4 billion in revenue. But again, likely all of this was already priced in by the markets. So you're not that shocked that Nvidia just beat and raised again, because that's pretty much what they do every quarter. We also had the Fed minutes that came out today at 2 p.m. And here's the main headliner on CNBC. It reads, Federal Reserve minutes indicate worries over the lack of progress on inflation. Participants observed that while inflation had eased over the past year, in recent months there had been a lack of further progress towards the committee's 2% objective, the summary stated. The minutes also showed various participants mentioned a willingness to tighten policy further should risks to inflation materialize in a way that such an action would become appropriate. Now, this does read as a little bit of clickbait, if you will, at this point, because we've heard from many Fed officials now, including Fed Mester, Fed Kashkari, since the last Fed meeting, that have all talked about needing to raise rates again, that they would do that if they needed to. Now, Fed Waller, Fed Bostic, Fed Barkin, those Fed officials seem to be on the side of, we'll just let monetary policy work and do its job. We don't need to raise rates again. So there is a little bit of division coming from different Fed officials now, but these Fed minutes are basically the transcript of the last Fed meeting. They don't give you any new details or new clarity from what the Fed is thinking today. It's from 3 weeks ago. So the markets didn't care too much. Tom Lee shared this on his X account. I think you need to hear it if you have not already. It's originally from Reuters. He shared it and said UK inflation fell by less than expected in April. Consumer prices rose by an annual 2.3%, down sharply from a 3.2% rise the month before. Tom Lee says 2.3% inflation is on target, and this is coming to the USA.
A study looking at what drives innovation cycles in America. And believe it or not, The two biggest innovation cycles in the US, which was 1948 to 57, which was a boom time, and 1991 to 99, were two periods when the world was short structurally of labor. So you had a prime age workforce growing slower than the total population, which means there was a lot of pressure on either wages or ways to innovate to produce more output. We've gone into a period of structural deficit of prime force labor, which is going to last till 2045, which means another tech cycle, I think, is underway. And for viewers, it's not just like Nvidia makes chips and you got to buy it. It's just that there may be an 80 million prime age workforce shortage globally. That's $3 trillion of wages that won't be spent on labor. Nvidia's revenues are $100 billion. So to us, this is really early stages for the amount of money that will be spent on generative AI.
So Tom Lee just said a new tech cycle is underway. As long as we don't get a recession, I agree with that. Now, if we get a recession, then any tech cycle, sure, it can still happen, but it's going to be a little bit harder and it's going to take a little bit longer. Judging off of just how the consumer is doing, I think it's far too early to say whether or not we definitively will or will not have a recession. I do firmly believe the first cut from the Fed is coming July 31st, 2024, and that will really help out equities this summer, especially throughout June and July, August, September. You do tend to get a period of selling before an election because there's uncertainties, there's different political spectrums, and these people want to do this and these people want to do this, and that definitely has an impact on the markets. But after elections, especially, presidential elections, markets tend to do very well the rest of the year. So after November 6th, you do have a Fed meeting coincidentally on November 7th. Following that, you should get a market that does pretty well towards the end of this year also. So really, consensus is, if we don't get a recession, if the consumer and the economy continues to hold in and hold up, then you could have a strong, really, rest of this year. I do think we want to watch for the broadening out of our markets. Again, if we avoid a recession and the economy does okay and the Fed can start cutting rates by July, in my personal opinion, then I see no reason why the average stock would not start to outperform your big tech names. Also worth mentioning is that Nvidia rallied $200 into earnings. I don't know if we're going to hold this gain that we currently have now, about 3.5%, throughout the trading day tomorrow. I think it could go either way here. And really the thing that's getting the stock moving in after hours is the stock split news. If we didn't have that stock split news, you would probably still be down 2 to 3%, like you were when the report first came out. Now, sometimes stock split news gets investors excited and sends the stock up even more in question. Sometimes stock split news does absolutely nothing, and the stock in question just sells off even more. Think about Google. When their stock split happened, there wasn't a lot of excitement around it. Now, tomorrow could actually be a pretty big day as well as far as economic data. You have the Chicago Fed National Activity Index, expecting that to come in as 0.16. That would be 1 point better than last month's number of 0.15. You will get initial jobless claims. Remember, last week you came in high. The week before that, you came in high. So if you come in high again, then that can be a leading indicator to say the labor market is getting weaker. Continuing jobless claims, same is true there, but usually initial jobless claims is what people really pay attention to. The bigger data tomorrow morning will be this: S&P Global Composite PMI, S&P Global Manufacturing PMI, and S&P Global Services PMI. All of these are expected to get a little bit better coming tomorrow. Now, they're pretty close to contractionary, all of them. Services a little bit better, composite PMI a little bit better, manufacturing is borderline right there at contractionary. If these come in really bad, then that's a sign the economy is not doing so great, right? So definitely what we want to watch for tomorrow morning is that you do have no New home sales as well expected as 0.68 million for the month of April. And then new home sales month over month expected to actually be negative 1.4%. You have Kansas Fed Composite Index expecting that at -4. Kansas Fed Manufacturing Index expecting that at -8. And that data comes out at 10 o'clock in the morning, or actually 11 o'clock in the morning. New home sales and S&P Global Composite data will be coming out right at about 10 a.m. So about an hour after the markets start trading. And then tomorrow night, you will get inflation data out of Japan. And that will also be important because, well, I mean, Japan is the single largest foreign owner of U.S. Treasuries. If they have higher inflation, then maybe some of that capital comes back to the Japanese market, which could put selling pressure in our bond market. So you probably want to see the Japanese inflation come in lower than expected. And expectation is that it actually falls from 2.7% down to 2.3%. We do have some earnings coming tomorrow as well with Ralph Lauren, TD Bank, Polestar. Tomorrow and after hours, you have Deckers Brands, Intuit, Ross, Workday, and a couple others. And then Friday, you have Boots, Allen Hamilton, and Mesa Labs. But really, from this point on, most of your major catalysts are done and over with. You do have durable goods orders Friday pre-market, and that can be important for judging how the consumer is spending money, if there's still robust spending going on out there. But it's not going to be the biggest data, right? So Nvidia was by far the biggest catalyst for this week. Tomorrow, that could just add a little bit to whatever we're going through. And again, I don't know if the stock split news in and of itself, the reason why Nvidia is going higher by 4%, if that's enough to hold the stock up tomorrow or not. Nvidia historically sells off either before earnings or after earnings. One could say you had a, $200 or so sell off before earnings. This was heading into April 19th when you hit your low, but that was a month ago. During the last month, you've rallied $200. You priced in the good earnings. You priced in the, earnings that beat expectations and the forward-looking guidance that beat expectations. It seems like the only thing that's not priced in out of this Nvidia report is the stock split.